This is Marek Fuchs here today to talk to you about what happened with healthcare stocks in the stock market at large last week, and more importantly, try to puzzle out what might be happening in the coming week. Now, in the coming week, we have a raft, a plethora, and a whole lot of retail earnings reports. It'll really be all retail all the time. But before we get to that, let's get to the micro, macro, and medical of last week. Now, last week we learned that Japan is now literally as well as figuratively in a recession. In other words, they met the technical threshold for a recession, 2 straight quarters of negative growth. Now, for a long time, obviously, the strength of the Japanese economy was seen as a threat to the American economy. But for some Americans who still hold true to that old thought, it might be a clear case of being careful what you wish for, because this Japanese weakness is not good for us, especially harnessed to the fact that Germany, the lone comparative bright spot in Europe, had growth forecasts cut to ribbons, and China's exports fell, we found out, even as inflation started to creep up. So none of that is great, especially as America careens toward this so-called fiscal cliff and has other systemic issues. Not great stuff. Now, meanwhile, on the medical ranch, we had Mylan filed suit in the hope that Roxbury won't be able to compete for Novartis' blood pressure drug. They want it, meaning Mylan, to be able to compete, but pretty much no one else. The lack of competition for Novartis has been a pleasant surprise for them there. There was a lot of competition anticipated. And also, a federal appeals court threw out an interesting case in which a pharmaceutical salesperson who was trumpeting off-brand uses of drugs was prosecuted for it. They threw it out, so this probably has implications going forward. Now, the Baxter Granbro acquisition went through, as we said it might. If you recall, and this is a good lesson, there was a Wall Street Journal article about a possible takeover. Now, these sort of articles are obviously always very tenuous and risky, but we did see there what we pointed out, which was, though the sources were anonymous, there were a fair number of them. They did seem to be high placed, and talks seemed to be in the advanced stages. It was clearly not a leak of an investment banker trying to put a company into play. Again, that never means that the deal will be consummated and will be announced like this one, but it is ever more likely. Also, last week there was a really interesting article in the Times. If you're not aware of this issue, you need to be aware of it. Speaking of dancing along lips of cliffs, well, the generic drug industry is dancing along the lip of a generic drug cliff. Brand drugs, about 35 billion came off label this year. Only about half of that will come off label in 2013. Now, in the coming week, again, all retail all the time. We have Dollar General reporting, Costco reporting, and Williams-Sonoma reporting, and more. So you'll get some sort of shape and sense of at least the lead up, the early stages, the prelude to the Christmas season. And this really affects how people think of the market at large. Healthcare stocks sometimes can't get out of the way if people are panicked or they're helped out if people are elated by the Christmas season. Do factor in sandy excuses, as we spoke about last week. Bad performance will always be blamed on Sandy, and it's only sometimes true. Also, if they're just sales numbers, not earnings, for retail sales reports, be aware of the profit issue. Obviously, around the holidays, a lot of people discount, so that means that they're not always making money on what they're selling. And from an economic perspective, please, please, please be aware of the fact that if retail companies do well because people are buying on credit again, that's not necessarily good, meaning sustainable news. One other note of caution this week and next week, please be a little bit aware of these what to expect if you're expecting 2013 articles. Granted, there could be some gems of insight in there, but all you want to do is look back, let your fingers do the walking, and see what that same author said about 2012. Again, doesn't mean that they're going to be all wrong or all right about 2013, but it allows you to kind of read this article as sport, not as gospel. In any case, if you disagree with me on any of this, and you won't, but if you do, feel free to tweet me. My Twitter handle is right below the video. Also, obviously, feel free to tweet me any and all questions, but most of all, have a happy, a healthy, and a profitable week.